Hey, what's up? Alright, so I realize it's been a minute since I've given y'all some real tips on how to straighten your wallet out in Korea, so today we're going to do a quick thing about how to read the company information provided by the Naver 증권 section on Naver Kumyung. If you're new here and you want to figure out how to open up an investing account in Korea, click through the link in the top right corner, but otherwise, let's get to it. This is 새끼들, and this is how to use Naver to screen your stocks. To start, I want to make it clear that I'm not sponsored by Naver at all, and that I'm simply showing you a way to start screening your stocks using one of the more convenient sites available at the moment. I personally use a variety of websites to gather information about companies that I'm looking at before I get into their actual site and start reading their financial statements or whatnot. But if you're a casual passive investor looking to quickly screen out the hundreds of options that are available to you on the KRX, then Naver is a great place to start. Let's go through it. The first thing you want to do is find the 증권 tab on Naver and click through to access the Kumyung homepage. The top toolbar has a few options such as home, domestic stocks, international stocks, general market indices like international currencies, West Texas Intermediate, blah blah blah. And then you have funds, research, news, and a section for your stocks. For the purpose today, I want to start by looking at the domestic stock page. Alright, so once you click through, you'll find charts for the KOSPI, KOSDAQ, and the KOSPI 200. When I'm looking at new stocks, or when I'm looking for new ideas, I like to start by clicking on 인기 검색 종목. This will bring up a list of the 30 stocks most searched by other people in one day. And while this is obviously not the best way to find value if you're looking for a diamond in the rough, it's a good way to get started if you don't really know where you're going on the day. Let's just click through a popular company so that we can get a better idea of what stats are available on the Naver interface. Okay, let's take a look at a well-known and relatively healthy company, Kia Motors. The first click brings up the chart and the current market price, but I want to focus on the metrics below. The section 기업 실적 분석. It contains important historical data such as 매출액, which is revenue, 영업이익, which is operating profit, 당기순이익, which is net profit, 영업이익률, which is operating margin, 순이익률, which is net margin, and ROE, which is return on equity. The left side of the chart will cover the yearly statements, so going back, I think at least 3 years, whereas the right of the chart is always your quarterly earnings, which is how they've done in the past 3 months. Alright, let's skip. Next section below the ROE has information on company debt, but for the purposes of beginner investors who are most likely to be watching these videos, the final two categories are going to be the quickest ways of clearing out the chaff and figuring out what companies are valued at fairest prices. So here's some of the key ratios that we're going to be looking at. We have EPS, PER, BPS, and PBR. EPS stands for earnings per share, which simply breaks down the total earnings made for each share of outstanding stock. Continuous EPS growth over a long time is ideal because it just means that the company has stable earnings and growth. For Kia, we see they've grown their earnings per share every year. Projections still seem down for this year as the coronavirus hit exports hard, and that can be accounted for in the quarterly data on the right. PER is the price to earnings ratio, and it's the most straightforward way of identifying whether or not a stock is expensive. The PE ratio essentially calculates how much you're paying for a share based on its earnings and is calculated by dividing the market price by the EPS. So with a PER of about 12.12, you'll be paying about 12.1 per 1 share of earnings. Personally, I like to cap my PER around 25 when starting out, and that tends to keep me away from extremely overpriced stocks, even if that means losing out on companies that are expected to be stable going forward. Next, BPS. BPS actually in this case does not stand for basis points if that's what you know it to mean. In this case, BPS is actually your BVPS, which is your book value per share, which measures the value of each stock by dividing the book value by the number of outstanding shares. It's an easy way to tell if a stock is undervalued by comparing the BPS and the market value. If a stock's market price is lower than its BPS, then you can consider it as being undervalued. Next, we have PBR. And price to book ratio is similar in a sense because it measures the price of a stock when comparing it to its book value. Book value actually just means company's assets minus its liabilities. There are debates about how important PBR is in modern markets, but it's still a widely used metric to help identify undervalued companies. Finally, the bottom of the chart has your dividend information. Dividends are the money that a company gives back to their shareholders if they deem it more productive than reinvesting it into the company. That being said, first, we want to start with the 주방 배당금. This stands for dividend per share, or the amount of money paid back to the shareholders on a per share basis. Next is the 시가 배당률, which is the dividend yield. This number tells you the percentage of money paid back to a shareholder of a company based on the share price. And finally, you have the 배당 성향. This is the dividend payout rate, and it identifies how much money the company is paying out to their shareholders versus how much they're reinvesting back into the company. All of these metrics can be used to screen companies based on what you're looking to achieve. A dividend portfolio will value high dividend payout rates as long as they're stable. Value portfolios will often consist of companies with low PERs. What information you value most will depend on what your trading strategy is. But either way, it's important to always check the last section that we're going to talk about, which is the 동일업 대비. The 동일업 대비 section is a section that compares industry competitors. It's usually at the bottom of the page, so you can directly scroll down if you're trying to expedite the process. So let's see. The top three indicators here are pretty straightforward. They simply represent the current share price, the stock's performance over the past trading day, and that's communicated through both price and percentage. Some people value these metrics. I don't really look at the day-to-day personally. Next, we have the 시가총액, which is important as it represents a company's market cap. The market cap is what the market determines the company is worth. Let's look at Kia. Based on current metrics, Kia is worth about 19 trillion won. When we look further into the chart, we can see companies like Sangyo, who has been struggling for over 3 years now and is only worth about 670 billion won. Through this, we can see the disparity in overall market value based on the current metrics. And you also have the ability to do simple comparisons like this for metrics like PBR and PER. This feature can also help you find some stocks that you weren't thinking about before within the same industry. They may be better priced, or they may have a larger market cap and you may be more interested in that. But it's a really helpful inclusion to the bottom of these pages. Now, with all that said, you may have noticed a glaring omission in the data that is on the site. While we have our ratios and we have our market cap and all that stuff, Naver is actually missing some essential financial information that you most likely want to consider when picking your stocks. Specifically, what I'm referring to are things like cash flows and actual specifics about company financials. That's why I use things like investing.com, Reuters, and MarketWatch whenever I find a company that I'm legitimately interested in. Many companies will also publish annual reports in English on their websites, so make sure to run a quick Google to see if you can find that as well. Alright, I know we've covered a buttload of information in this one video, so here's a page that you can screenshot or copy to have as reference. Most of these ratios are also available on other sites as well, but keep in mind that the Romanization of Korean companies won't show up as such in your brokerage app. That's why it's important to cross-reference the listing number of the asset that you're looking at with the one in your app. Also, when you search for a company, you'll often see two listings. Maybe it'll be one like 상용양회 and another one will be 상용양회우. The first one of just the company name is just a common stock, whereas the second one that is ended in U refers to the preferred stock. You can look those up, figure out what the differences are and which one you want. They are pretty different overall in terms of their value and what they do and what you can get out of them, so make sure to do that research before you actually hit buy. Alright, I'm gonna get out of your hair. I hope you found this useful. Like and subscribe, hit up the comment section below with your strategies and your plans going forward. But until next time, don't forget to cop your 상품권 and also support local businesses. Bye.